Parliament is divided over a proposal by the National Treasury to repeal the law capping interest rates as indicated in the Finance Bill 2018. Instead, a section of members are calling for further amendments in a bid to ensure small and medium enterprises have access to the credit they have been starved of for nearly 2 years. Mumbi Roy has the details.
This is a very prestigious position.
The debate on the report by the Departmental Committee on Finance and Planning on its consideration of the Finance Bill 2018 opened the lead on the division of the House. Legislators pulling on different directions on the contentious capping of interest rates that came into place in September 2016.
We cannot allow to amend the capping rate, Mr. Speaker. The banks have been making abnormal profits.
I would support a proposal where we have a review of the lower cap, but we should never and we must never allow the banking industry to intimidate this House and indeed Kenyans to review the upper cap.
Others of the opinion that decline of credit access in the recent past had not only been affected by the caps, but other factors as well.
It is high time the government starts thinking about not competing with Kenyans in terms of borrowing from our local banks. Because so long as that is going to happen, money will not be lent to small-scale farms. It will not be lent to individuals.
Any two people, they should be able to differentiate between somebody who is a good credit risk and the other one.
Treasury had in its proposals to the committee urged the House to repeal the law. This on admission that it had failed to realize its objectives. However, with commercial banks controlling 95% of credit in the market, analysts are of the opinion that the government should diversify its borrowing streams.
The one that will work and will work for long term is just advancement and development of capital markets and the empowering of private players, and also giving people who wants to put money, give people other alternatives as opposed to putting a deposit in a bank in turns lends. We also give the same incentive to private players that are also able to provide funding.
Oduor urging legislators to shift their debate to focus on other elements that could foster credit growth, allowing Kenya to access its balance of payment support from the International Monetary Fund, IMF.
The role of IMF coming in terms of ensuring that there's economic stability, credit flowing in the economy to ensure economic growth, and again policy transmission mechanism to affect also that will in turn affect economic growth.
Despite the bill being in its second reading, it remains suspended by the High Court pending hearing and determination of petitions filed by activist Okia Omtata and the Kenya Bankers Association on the implementation of new taxes. Mumbi Roy, Citizen TV.